titanium, you've got the battery recycling, you've got this project, you've got nickel, you've got some great projects in the portfolio. Do you feel in control?
Absolutely. We know our skill set, we know what we do. We will leave the material in better condition than when we found it. I can't see from a holistic or an altruistic perspective how this is not a win-win for every stakeholder.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up at the end, it'd be much appreciated. And do leave your comments below. It just helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course what you thought of the company. And if you want to catch this as a podcast, read about it as an article or transcript, go to cruxinvestor.com. And of course, for our early access members on Crux Club, you get to see this video first. Plus, if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We caught up with Chris Reed of Neometals earlier today with a couple of his team members, Dave and Darren, to talk about the scoping study results from their vanadium recovery project in Sweden. SSAB have a huge pile of slag there, and Neometals has got a methodology to extract that economically, be low quartile type cost producer. So that's quite exciting. Hydromet technology versus pyromet. We discuss how they're going to go about that. We also discuss some of the broader issues that Neometals are dealing with. Some quite exciting projects, all based around the battery thematic. I think it's one of the most exciting companies out there. They've got about $100 million in cash. They're a project developer type model, so they don't have to spend too much, bring in large strategic partners with cash, and it's worked so far. There's no reason to see why it won't work in the future. They've got projects delivering every year for the next 3 years. I think there's going to be an uptick in their valuation, or I'd certainly expect there to be. So take a look in the description below. If there's anything that interests you there, click the number beside the topic and that'll jump you to that part of the video. Otherwise, enjoy what Chris and the team have to say. Chris, how are you doing, sir?
Very, very well, Matt. Thank you.
Yeah, and I better say hello to Darren and Dave. How are you guys?
Hi there.
Yeah, good, thanks. Morning, Dave.
Very good.
Good to speak to you again. Good to speak to you again. But we are going to be talking today about a press release with regards to your vanadium project in Europe. Good news, Chris?
Yeah, look, absolutely. You know, as a first pass, we've got a project that can operate in the first quartile of operating costs and is, you know, secured by a conditional long-term supply agreement. So, you know, given the exceptional grade of the stockpiles, you know, it comes as no surprise, and we've got plenty of scope to improve those outcomes. But, you know, first hurdle passed.
Yeah, no, it's good. I was looking through some of the numbers, and I do want to get through it. But why don't you kick off and give people a sort of that 1 minute reminder of what it is that you put together here on this particular deal?
Certainly. So Neometals is funding the evaluation of constructing a processing operation to recover vanadium from byproducts from Sweden's national steelmaker, SSAB. So we are earning in, if you like, into a 50-50 joint venture with a company called Critical Metals, unlisted. And so we are funding the evaluation that satisfies our earning requirement. The Critical Metals has a conditional 10-year supply agreement with SSAB to purchase the stockpiles of the byproduct slag that's stockpiled at 2 locations in Sweden and 1 in Finland.
Okay, brilliant. So we have talked about this just a few weeks ago, and obviously you've moved things on significantly. You've got the scoping study. I mean, have things gone smoothly as expected, and are the, you know, as a result, what you thought? Because, you know, when you were quite confident when we last spoke, but it's never always plain sailing.
Yeah, look, I think, you know, we did an extensive due diligence before entering into the agreement with Critical, and indeed the back-to-back agreement with SSAB. We took samples from the 3 major dumps or stockpiles. We then subjected them to bench scale laboratory test work that was undertaken under Dr. David Robinson's supervision. We then fed that into an engineering study managed by Darren Townsend. We got Primero, who are an Australian EPC firm, to undertake it. I think it's fair to say that it was an extensive due diligence period. It was about 9 or 10 months in total. So we were able to complete the metallurgical test work commensurate with being able to move very quickly to a scoping study. In fact, during the scoping study, we've taken samples for the pre-feasibility test work, and now we've got a drill rig up on site taking variability samples, which you would normally find as a precursor for a full feasibility study. So we have a timeline, an indicative timeline that we put into the market. And of course, we're a very well-funded project developer, and we have our foot flat to the boards, so to speak.
Yeah, and that's a good point, and possibly one worth reminding people. You are very well funded. You've got $100+ million in the bank. This project developer model that you guys have engaged with, you've done it successfully with Mariot on the lithium project. You've got various projects on the go, and I think in fact, just if you would just describe the model that you employ there, because it means that you're able to not use up vast sums of money, but develop projects through to a point where you bring in strategic partners effectively.
Yeah, essentially we are project developers. What we identify is we want to be in commodities that have a very strong long-term fundamentals from a demand and supply point of view. And so our exposure that links all of our projects is to the EV and energy storage thematic. And that picks out the commodities, then we pick out the projects that we like. Traditionally, we've been more upstream. What we've now done is pivot towards recycling with respect to lithium. We developed an upstream lithium operation. We're now looking at the ultimate downstream, which is the recycling. We do have an upstream titanium vanadium project, but we're now looking at materials recovery from essentially what is equivalent to a tailings from a mining perspective. So, we identify the projects, we build value by taking them through evaluation or exploration if it's needed to make the size of the pie bigger. And then what we try to do to optimize our outcome from an invested capital and indeed from a risk perspective is to bring in strong partners to operate and finance it essentially, some offtake, and that enables us to develop the projects at their optimal size, which is quite often difficult for smaller mining companies without excessive dilution. I mean, as you mentioned, we've got a fantastic balance sheet. I think at last quarter it was a little under 100 in terms of total working capital, being cash and investments. It'll be a little less because we've paid an $10.9 million dividend in the latest quarter, so that will naturally go down. But we are very well funded to push these projects through to an optimal size, but then you actually have to get them into operation, and we've done that with a couple of multi-billion-dollar companies developing Mount Marion into what is the world's third largest source of lithium units in the world as of sort of last quarter. And we've got strong partners for the battery recycling in SMS Group. We've got looking at an Indian lithium converting plant with Manikaran, who's India's third largest power trading company, using a lithium feedstock offtake that we retained as part of the sale process. We're working with a Chinese group on Barrambie, and at this stage we're doing some nickel exploration. We have about 140,000 nickel metal tons. Nickel's obviously going to be a very increasingly important commodity in the EVs as we move to the less cobalt bearing EV batteries.
No, I think it's fascinating. Why we were attracted to you and why we keep talking to you is it's the you're kind of coming at a slightly unusual angle in the sense that you're in the battery EV thematic, that space, but you're trying to get away from the risk, underground risk, and go above ground on some of these projects like the battery recycling and obviously this vanadium recovery program as well from slag. So it's just kind of interesting also from not only trying to de-risk some of your investments, but the kind of whole ESG component to it as well seems to be very timely at the moment. Is that a big part of your thinking?
Well, look, certainly we're walking the talk in terms of the last two projects and the nearest sort of projects to significant re-rating events are indeed in the recycling and materials recovery as opposed to upstream mining. It is less risky because obviously you don't have to mine the material. I'm not saying it's without risk, but it's a much more quantifiable risk. And it has obviously a lower CO2 footprint because there's no mining and processing upstream involved. And we're recovering high value products and really closing the loop for these supply chains where societal and government regulations expect best practice and best utilization of finite resources, and recycling and materials recovery, ticks ethical, environmental, security of supply issues, particularly when you look at Europe that doesn't have a massive amount of domestic supply of these key building blocks to keep powering their EV revolution.
Yeah, and I think that's absolutely right. We've again been having lots of conversations about more and more of the funds out there are looking for proper end-to-end, carbon neutral to as much as you can do, but more of the process being socially responsible as well. So that just kind of interesting from that angle as to when you think about all of these big funds sort of changing the terms of their investment thesis. So it's just something that we wanted to touch on. Maybe we can come back to you and learn a little bit more. But back to this project. You're in Europe. There's a big battery initiative in Europe. You've kind of got China, Europe, and USA trying to create their own kind of ecosystems for this. I mean, have you been sort of encouraged by what you've seen about the way that Europe is approaching this? Do you see any country risk in any of this? Any barriers?
So look, I think in terms of country risk up in Scandinavia, they do expect a high level of environmental responsibility. And look, we're very confident in the process and the people and the partners that we have that will move through that as we expect to. It is a very environmentally friendly process that Dr. Dave has come up with. It will leave the feedstock in better condition environmentally than we find it. We are able to extract it. It's a win-win in terms of we will be essentially remediating what would be a responsibility of the steel makers to handle that, or rehabilitate that at some point in the future and extract value. So I think we're pretty confident with that. I mean, in terms of the EU generally, and the battery initiatives and all the regulatory and investment incentives from the local, state, federal, and even the EU is really a fantastic tailwind to be the beneficiary of. So we are very comfortable with operating in that hemisphere.
So tell me about, and it might be one for Dr. Dave, which is around the flow sheet and the process, because you guys have got this hydromet process, and traditionally there's been sort of pyromet process. I mean, was that part of the reason why you were able to get this contract? I mean, how much did that contribute to the thinking when you were sort of in discussions with your partner?
Yeah, very much on my mind was a clean process, and we've come up with a hydrometallurgical flow sheet that is very selective for vanadium removal. And as Chris says, it actually leaves the leach residue as a much more stable form of the slag than the original stockpile. So we're actually improving the quality of the material that's left behind after the leach, as well as removing the value element.
So the skill totally resides, or the intellectual property resides with Neometals, and your partner is expecting you to deliver on that. And remind me again, will you be operating here, or are you just giving up the technology?
So look, I could probably jump in there, Matt. So we've agreed to license the technology into the joint venture. At this stage, we are looking to have a 50-50 incorporated joint venture in what will be currently a Swedish company that holds the rights, or is the counterparty to the conditional purchase agreement for the feedstocks. And so we will work with them in terms of operating. I mean, obviously, we've got to make this a success. So I think we'll have equal contributions. And it's quite likely that our technical team will obviously have to be involved in the IP transfer into the operational base. Certainly up at where we're targeting this at Luleå, up in the north of Sweden, it's a fantastic location. There's actually a technical university there with somewhere around 15,000 students. So from what I can work out, it's almost the equivalent of having a mining Kalgoorlie, where you have the West Australian School of Mines, where you've got a good supply of skilled potential operators.
Okay, so let's move into the economics here, because that's what investors and potential investors looking at this is what they want to understand is what do the numbers look like. So the numbers that we're seeing is we talked about before, 200,000 tons per annum. It's currently a 10-year term with the possibility of extension. So they're sitting with around 2 million tons at surface. So that's quite nice. What is the likelihood of being able to upscale this thing in terms of the kind of life of mine equivalent, given it's all sitting above ground? I mean, what do they keep feeding more and more onto the stockpile?
Yeah, correct. They're currently adding to the stockpile somewhere around, in my mind, about 180,000 tons per annum. We have a number of years where we are moving through the pre-feasibility study next financial year, then the feasibility study the year after, then we've got a construction window. I expect that they'll add somewhere between 600,000 and 700,000 tons by the time that we look to want to start processing material. One of the conditions we have in the agreement is that upon making a positive investment decision, we'll actually purchase the stockpiles at Luleå, and we would then move them over to our site, so that we've always got what would be, in a mining parlance, the equivalent of having stockpiles ahead of your mill for a number of years. I expect that satisfactory performance of the contract, if it's indeed a win-win, where we're paying valuable consideration to SSAB while alleviating the costs required to potentially rehabilitate or remediate those stockpiles. And we are operating to best practice. I couldn't see any reasonable basis that we couldn't have a meaningful discussion about increasing the scale upwards or extending the life outwards. I think with such an extensive stockpile at the moment, it would make sense to us to examine an increase in the production rate.
Okay, so vanadium market at the moment has always been a little bit erratic, or certainly has in the last 2-3 years in terms of pricing. You guys are I think the number was quite low. It was like $3.92 a pound, which is pretty darn low. There's margin to be made there, even at today's prices. What do you think the vanadium market's going to do? To remind people, about 90% of that goes into the steel sector, and people are talking about vanadium redox flow batteries as well coming to the fore. But where do you think you're going to be selling this into, and how?
Yeah, look, at this stage, the flow sheet contemplates producing vanadium pentoxide, which is quite a common chemical. It's probably the largest chemical that's produced. Most of the production is pentoxide converted into ferrovanadium that hardens steel. Increasing applications in terms of, it is a master alloy for aerospace titanium alloys. You have to alloy the titanium metal, which is strong but brittle, with vanadium and aluminium that make it ductile. And also you have, as you mentioned, the vanadium redox batteries. So we have the flexibility to go from V2O5 into a sulfate precursor, or we can extend ourselves to make ferrovanadium. Okay,
so I'm building up a picture. You've kind of got around, in my mind, from what you've said, before you get into production, once you've made the decision to get into production and you can get to that point, you've got about 13 years worth of feedstock, but it's continually being replenished. The option of upscaling it and having discussions about 100% ownership of stock as well. So that's kind of interesting to me in the context of it being a low cost or lowest quartile producer. Can we get into the numbers and the FID here? So what is the process between now and the point at which you do get into production that you guys are going through? Because you can choose to opt out at any point, but I suspect what you're saying now is that we're very encouraged, and we probably won't be doing that. So what is the process between here and getting into production, and when would that be?
So next step for us is to complete the pre-feasibility study, and we need to have that completed by middle of next year. And effectively work has, in proxy, sort of already commenced on that. We've started collecting samples from the stockpiles up in Sweden. We've got a drill rig up there at the moment, and we will, obviously take that work and continue on through into the pre-feasibility study. Formally, we'll get our board approval in the coming a couple of months to formally commence that, but early works have started. So that'll be by the middle of next year. We'll then, off the back of success from that, look to go through to a feasibility study, which we'd be looking to complete by the middle of 2022, and a FID for the project at the end of 2022.
Okay, so the FID would be end of 2022. Okay, and what happens at that point? How much more money? In fact, how much money between now and then what would you have to then commit yourself to at the end of 2022?
Sure, well, the studies that we're funding at the moment, that's our obligation in our arrangement with Critical Metals, and we're talking total expenditure for all of our commitments of circa $5 million.
And that's in total, or is that from now to that point?
That's from now to the FID.
Right, and then when you've done the FID, Chris, probably back to you in terms of the terms. What have you agreed to do in terms of your capital expenditure and commitments?
Yeah, sure. So for the FID, as I mentioned earlier, we would be purchasing 700,000 tonnes of stockpiles at Luleå. The ultimate price depends on the prevailing vanadium price at that point in time. I suspect it'd be somewhere between 5 and 10% of the overall capex of the project, potentially to purchase those stockpiles. But like I said, it's vanadium dependent, might be a little higher. And essentially, the capital costs that we are looking at about $160 million US. We would be in a 50-50 incorporated joint venture with Critical Metals. So, our funding requirement would be $80 million US. And then, of course, we would try to bring in some of the debt that's available for some of the, these EU innovate where these financings are coming through for commodities that are linked to the energy storage and EV thematic. This one really lends itself more to the stationary energy storage thematic. I mean, VRBs have been around for a while. You've got Robert Friedland bought the world's second largest VRB manufacturer in China. I know they've got very bullish plans going forward for that project. You know, we see that there are quite a lot of VRB manufacturing capacity held back by the availability of the electrolyte, which is a key part, and which is essentially a vanadium sulfate solution. So, you know, if you wanted to tailor it for the green funds, you would produce vanadium sulfate. If you were looking to use the traditional EXIM financings, you would probably either look at a pentoxide or a ferrovanadium or a metallic sort of form that could go into the steel makers. But it is a wonderfully, I guess, unique chemistry or not chemistry, compound or element that, you know, you can have multiple uses from hardening steel. You have pharmaceutical applications, you have energy storage applications, and then you have aerospace applications. So
no, I think it's interesting time.
I think that augurs well.
No, I think it does augur well for vanadium moving forward, as it does with a lot of battery metals at the moment. You're at all nervous about, I mean, given the timelines and what you're doing between now and 2022, are you nervous at all about what's happening on the macro economy? Do you think there's a kind of disjoint there between, you know, what's happening in the world and your business?
Yeah, look, I think I take some solace that it is actually a hard asset. They're hard commodities, and you know, they generally respond if there's some inflation to maintain their sort of value. I think for me, yes, the vanadium market is one of the most volatile commodities out there. I mean, we acknowledge that. We've been in the vanadium titanium development game for about 16 years. So we are acutely aware of that, and the only long-term defensible strategy with my miner's hat on is to be as far down the cost curve as humanly possible, and to keep driving that. Now, I think one of the overarching thematics for a lot of commodities worldwide is that the mines are getting deeper and the grades are getting lower, and the mining costs, or the mining cost per unit of output or final production, are endlessly going up, and you are getting cost push inflation. So I don't want to rely on demand pull inflation, because I'm not entirely sure when the world economy will be back in and we will receive demand pull pricing. But, you know, I can say that there would be cost push inflation at the current market price. And as you pointed out, being in the first quartile, you are comforted by the fact that the other 75% of producers are in a worse spot, and that, you know, I think if you go back to fundamental economics, you will turn off quite a lot of production and the price will respond before you ever get down to the bottom quartile.
Okay, so a lot of the things you talked about today, it seems very, very positive. We're just at a scoping stage. There's a lot of things that have got to go right between now and the end of 2022. But is there anything that's making you nervous in any of this? Are you seeing anything in the European economy which makes you nervous? Your partner?
Once you take the mine out of it, the feedstock, the first 10 years feedstock exists above ground today. It is actually improving as the snow builds up on it and then melts every year until we get to the stage of starting to process it. We will leave the material in better condition than when we found it. I can't see from a holistic or an altruistic perspective how this is not a win-win for every stakeholder. I just can't, I think it's one of the few projects I've ever seen in my life that you will genuinely be leaving somewhere in a better condition than you found it and be able to make some money. And I think, we're blessed if we can remediate something and earn a good return from it.
No, I think that's true. We've been interviewing again with a handful of tailings companies, mostly on precious metals and so forth, but and PGMs. But I think that again, coming back to that whole ESG component, I do agree with you there, and I think that's kind of reflected in the share price when they've kind of got things going, when they've got into production. That's why I'm saying, was asking a question between now and getting into production, anything that kind of sticks out as a hurdle to be got over or something to be addressed.
Yeah, look, I think we're not familiar with operating up in Sweden. Our partner, Critical Metals, has been operating since 2007 up there and has had a number of projects, has extensive contacts on the ground and operating around that area. And that, without them, we would not have ventured to expend capital in the evaluation of this opportunity.
Okay, so if we look at SSAB, obviously huge, $1 billion operation, billions of dollars of operation there. They've got lots of feedstock coming. 180,000 tons a year is significant. Is there room to do more with them? Have they got more stocks elsewhere? I mean, are those conversations which are happening? Assuming you get over the line with this one and you prove that you can work together.
I think when you're entertaining or you're entered into an agreement and it's a new relationship, then we've not interacted with them before. And so I think as we go through our studies and meet our timelines and our interactions, which with our partners are very frequent, then you build up the rapport. And I'd like to think, we're comfortable with how we operate and our history in the industry. And, they've been operating in Scandinavia for a very, very long time. And I think, if we perform well and they perform well, I can't see why you wouldn't look to deepen your relationship. Okay.
Look, I'm really interested in see how this thing moves. And I think of the next date, Darren, that you talked about was pre-feasibility by middle of next year. So that's the next thing that we should be looking for. Is there anything in between now and then that's worth being aware of?
I think as we progress with our drilling activities up on site and recover more material, I think as we get results from that drilling and results from the laboratory, we'll be able to keep the market informed of upgrades through those processes.
Okay, brilliant. Well, look, I mean, guys, thanks for that. I'm just interested because you do have a number of projects on the go. You're kind of juggling things here, or do you think that you're you feel relatively in control in each of those? Because we've mentioned obviously the titanium, you've got the battery recycling, you've got this project, you've got nickel, you've got some great projects in the portfolio. Do you feel in control?
Absolutely. I mean, that's what we've got, dedicated teams to each one of the businesses. And we've got partners for each of the businesses. I mean, we know our skill set, we know what we do. We take successful R&D outcomes, we take successful exploration projects, and we try to take them so far, and then we want to monetize them with strong partners who bring operating and financial skills.
Yeah, it's interesting actually, because again, you're not short of cash. Like say, nearest down at $100 million. But I think, when do you think this re-rate moment comes? When do you think people will recognize each of the projects in their own right and then give you some credit for that? Because I know it's kind of early days and you could segue from being a miner to being a project developer, and perhaps there's a period you've got to go through. But how quick do you think that re-rate will come?
Yeah, look, I think certainly the nearest cash flow on the horizon is the battery recycling joint venture. So, the catalyst there, where you're partnering with a multi-billion-dollar company, we own what would be the largest comminution and beneficiation or shredding plant for lithium batteries in Europe, Part of that has arrived already in Germany. The rest will shortly depart the US, and we will have that assembled in Germany, ready for operation. I think perhaps towards the end of this year. We have had obviously a couple of months slippage from COVID. Putting that partnership, which is really SMS commercializing what has been a great outcome in our R&D program, coupled with the fact that we already own what would be Europe's largest front end, and then putting economics into the margin, the margins into the market, will help it be valued, and we're looking to get to an FID for this project in 2021. Now, if you make it, and so, that gives the market a lot more confidence we can actually make money and increase our balance and worth. And then you're having a look at, 21 for the battery recycling, and then you've got 22 for the vanadium recovery project, and then you have 23. You could have the lithium hydroxide refinery, because you want production there to be delivered in about 25. Barrambie is a project that has its mining and construction approvals, and we are just waiting for the market so that we can secure offtake that would underpin development of the project. With the nickel exploration, nickel, almost like lithium, we see that you'd want to be starting to deliver into the back half of this decade. And so we are in the process there. We've got 11 nickel sulfide resources. We wouldn't mind adding to that a little bit. And then what we can have a look at is moving that out of exploration into perhaps a dedicated listed vehicle for the benefit of our shareholders, and put a development team to go through the evaluation, a multi-year evaluation, so that they can look to make an FID to deliver into, when we think the market is right.
You're stacking them up, Chris. You're definitely stacking them up.
We've got a fantastic portfolio of projects now, varying levels of capital intensity, all and varying levels of return on invested capital for sure, but all good projects. And we like to make money and share it with our shareholders. That's being realistic and partnering and getting your money back early and taking the risk out has enabled us to deliver in excess of $55 million back to the shareholders in 5 years. Now, there's not that many miners that can do that, and it's something that we pride ourselves on.
Yeah, well, it's a nice way to finish the conversation. Dividend paying, fully funded, ESG compatible, multiple projects stacked to deliver, over the next 2, 3, 4, and 5 years. So great job. Look, stay in touch, guys, when there's something to say. I'm sure there will be. You've got so much on, so appreciate your time today. Thank you.
Thank you very much, Matt. You keep well.